Hi, I am Marvin and I am here to discuss the difference between business income and hobby income for income tax purposes. It should be noted that business and hobby income should be reported for tax purposes. The main distinction between the two income is whether or not a profit motive exists. This profit motive is the test to determine whether the activity is entered into in good faith with the intention of making a profit. That is, for business income to be considered as such, it must have a profit motive in order to have a deductible expenses that are related to trade or business. On the other hand, hobby does not have a profit motive and is more of for self-enjoyment purposes only. Next, the difference lies in the regularity of the activity. When you see to it that you produce goods or render services on a regular manner, then you have yourself a business. But if you have just produce goods or render services on an irregular interval, then you have a hobby. Finally, if you keep records of your sales and expenses, you have a business. But if you don't regularly keep your records, then it might be a hobby. The following factors or facts are examined in order to prove a profit motive. First, the time and effort invested in the activity. This is when you do, in a great amount of time, market researches, business planning, and implementing marketing strategies. Second, your expertise in the activity, like whether you have technical knowledge on what you are doing or investing on classes to learn more about it. And third, in the intent of income objective, whether the income earned from the activity will be the primary source for yourself and your family's basic needs or just an additional income to be used for a specific event. Your business income will be reported under Schedule C of your Form 1040, while your hobby income will be reported under other income. With this, expenses can be claimed as deduction against your business income, while hobby income are not allowed to be deducted with any expenses. Before the Tax Cuts and Jobs Act or TCJA, expenses are allowed to be deducted up to the amount of hobby income. These were claimed as miscellaneous itemized deductions on Schedule A, subject to 2% limitation. The IRS also follows the 3 out of 5 year rule, where failure of the activity to show a profit in 3 out of 5 consecutive years may classify the activity as hobby, to which the taxpayer must then prove the profit motive in the activity. Both business and hobby incomes will be subject to ordinary income tax. However, only the business income will be subject to employment tax. It can be daunting for those who have business income that they will be subject to an additional tax of self-employment tax, but it should be noted that if you have a business activity, you are allowed to deduct business expenses, which could be a great deal of tax savings for you. Now let's proceed to the 9 factors IRS uses to determine business from hobby. First, the taxpayer carries out activity in a business-like manner and maintains complete and accurate books and records. So if your activity has adequate financial records, business or marketing plans, and your personal and business funds are on separate accounts, you may have yourself a business. Second, the taxpayer and their advisors have the knowledge needed to carry out the activity as a successful business. Taking courses related to your desired activity or hiring a professional consultant will take your hobby into a business. Third, the time and effort the taxpayer puts into the activity show the intent to make it profitable. Investing more time into running the business, involving yourself to managing inventory, improving the website, promoting the shop, and expanding marketing efforts to grow sales are indicators that your activity is a business. Fourth, the taxpayers can expect to make a future profit from the appreciation of the assets used in the activity. Treating the property as an investment, perhaps renting it out for income, and making improvements aimed at increasing the resale value may indicate that you have a business. Fifth, the taxpayer was successful in making a profit in similar activities in the past. This considers your capability to turn ventures into profitable businesses by analyzing reasons for past failures, adapting new strategies for your activity, and implementing practices from successful businesses. Sixth, the activity makes a profit in some years and how much profit it makes. The 3 out of 5 year rule also applies here. Consistent losses without attempts to make changes may suggest a lack of profit motive. For it to be considered as business, review of business operations, exploration of new markets, adjusting pricing strategies, and adopting cost saving measures to steer the business toward profitability are necessary. Seventh, the amount of occasional profits, if any, which are earned. Substantial profit may indicate profit motive. However, if there were minimal or non-existent, it may point to a hobby. The financial status of the taxpayer, whether they depend on income from the activity for their livelihood, may determine whether the activity is business or hobby. Ninth, elements of personal pleasure or recreation. If the activity only involves significant personal enjoyment, it may be seen as a hobby. As a final note, taxpayers need to prove that they have a profit motive to the IRS so that the IRS can consider their activity as a business and not a hobby to avail of any tax savings from expenses claimed as deductions. Remember, the burden of proof is on the client. That's it for today. Thank you very much.